Welcome to Wealth Heaven. Today, we're tackling a financial tool that is often misunderstood and frequently misused: the personal loan. A personal loan can be a financial lifeline, a smart, low interest way to consolidate debt or fund a necessary expense. But it can also be a financial trap, luring you into unnecessary debt with a deceptively easy application process. Our title is clear: The Ultimate Guide to Personal Loans, When to Use Them and When to Avoid Them. By the end of this 10-minute guide, you will know exactly how to use this tool to your advantage and, more importantly, how to avoid the costly mistakes that lenders hope you make. Part 1. What is a personal loan? Let's start with the basics. A personal loan is an unsecured installment loan. Unsecured. This means you don't have to put up collateral like your house or car. The loan is approved based on your creditworthiness and income. Installment. You receive a lump sum of cash up front, and you pay it back in fixed monthly payments over a set period, the term, usually 2 to 5 years. The interest rates are fixed, and they are generally much lower than credit card interest rates, which is the key to their power. Part 2. When to use a personal loan. Host, a personal loan is a powerful tool when used strategically. Here are the 3 best reasons to take one out. 1. Debt consolidation. Host, this is the most common and often the smartest use. If you have high interest debt spread across multiple credit cards, a personal loan can be a game changer. The math: credit card APRs often range from 20% to 30%. A good personal loan APR can be as low as 8% to 15%. By consolidating, you save thousands in interest and simplify your life with a single, fixed monthly payment. The discipline. The loan has a fixed end date. Unlike credit cards, where you can carry a balance forever, a personal loan forces you to pay off the debt by a specific time. 2. Necessary home improvements. Host, a personal loan can be a good option for home repairs or improvements that add value to your home, especially if you don't want to use a home equity line of credit, HELOC. Example: a new roof replacing an old HVAC system, or a kitchen remodel that significantly increases the resale value. These are investments in your asset. 3. Funding a major planned life event. Host, for events that are unavoidable and require a large upfront cost, a personal loan can spread the burden. Examples: a wedding, adoption expenses, or necessary medical procedures not covered by insurance. The key here is necessary and planned. You should only borrow what you absolutely need and have a clear repayment plan. When to avoid a personal loan, the costly mistakes. This is the critical section. Lenders make it easy to borrow, but you must resist the temptation to use a personal loan for these reasons. 1. Funding a vacation or luxury purchase. Never take out a loan for a depreciating asset or a fleeting experience. You will be paying interest on a trip you took 2 years ago. If you can't afford the vacation now, you need to save for it, not borrow for it. 2. Investing in the stock market. Borrowing money to invest is known as leveraging, and it is extremely risky. If the market goes down, you lose your investment and still owe the full loan amount plus interest. This is a gamble, not a strategy. 3. Paying for everyday expenses. If you are taking out a personal loan to cover rent, groceries, or utility bills, you are not solving a debt problem. You are masking a budgeting or income problem. A loan in this situation is a temporary fix that will lead to a debt spiral. You need to address the root cause, not take on more debt. Part 4. The application process and key terms. If you decide a personal loan is right for you, you need to know the key terms to ensure you get the best deal. 1. APR, annual percentage rate. This is the true cost of the loan. It includes the interest rate plus any fees. Always compare the APR, not just the interest rate. The lower the APR, the better. 2. Origination fee. This is a one-time fee the lender charges for processing the loan. It's usually 1% to 8% of the loan amount and is often deducted from the lump sum before it hits your bank account. Look for lenders with low or zero origination fees. 3. Secured versus unsecured. Most personal loans are unsecured. A secured personal loan requires collateral, like a CD or savings account. Secured loans offer lower APRs because the risk to the lender is lower, but you risk losing your asset if you default. 4. Soft versus hard inquiry. Before applying, use the lender's pre-qualification tool. This uses a soft inquiry and does not hurt your credit score. Only proceed with a formal application, which triggers a hard inquiry, once you are confident in the rate and approval. Too many hard inquiries in a short time can damage your score. The ultimate strategy for the best rate. To ensure you get the lowest possible APR, follow this 3-step strategy. Step 1. Boost your credit score. Your credit score is the single biggest factor. A score above 740 will qualify you for the best rates. Before applying, pay down credit card balances to lower your utilization rate. Step 2. Shop around aggressively. Do not just go to your primary bank. Use online comparison tools and check rates from at least 3 different types of lenders. Your bank or credit union often offer the best rates to existing customers. Online lenders often have the fastest approval and funding. Peer-to-peer lenders. Choose the shortest term you can afford. A shorter loan term, e.g., 3 years instead of 5, means a higher monthly payment, but it drastically reduces the total interest you pay over the life of the loan. Always choose the shortest term that fits comfortably within your budget. Conclusion: take control. A personal loan is a tool, and like any tool, its value depends on the hand that wields it. Use it to consolidate high-interest debt and fund necessary value-adding expenses. Avoid it for luxuries and everyday spending. You now have the ultimate guide to taking control of your debt and your financial future. If this video helped you, please hit the like button and subscribe to Wealth Heaven. Let me know in the comments what you plan to use your next personal loan for, or what debt you plan to consolidate. Personal loans have become an essential part of modern financial life. While many people understand them superficially, few truly grasp their potential benefits or dangers. At its core, a personal loan is simply borrowed money that you agree to repay in a fixed period, usually with monthly payments that cover both principal and interest. However, the simplicity of the concept masks the responsibility it entails. Borrowing money may sound easy, but using it wisely requires planning, discipline, and understanding your financial goals. A personal loan can serve multiple purposes. For instance, it can help someone facing unexpected medical expenses, allowing them to receive timely treatment without depleting their savings. Similarly, urgent home repairs, such as a leaking roof or a broken furnace in the middle of winter, can be financed through a personal loan. Without such financial support, individuals might resort to high-interest credit cards or payday loans, which can create long-term debt problems. Beyond emergencies, personal loans are useful for planned expenditures that carry long-term value. For example, education is a major investment in one's future. Whether it's tuition for a professional course, certification, or training to gain new skills, a personal loan can make these opportunities accessible. The key is to borrow an amount that is manageable within your budget, ensuring that repayment does not create stress or financial imbalance. Many borrowers find personal loans advantageous for consolidating existing debt. Managing multiple debts with varying interest rates and payment schedules can be overwhelming. By combining them into one personal loan with a lower interest rate, the borrower simplifies payments and reduces the total interest paid over time. This approach also provides a clear timeline for becoming debt-free, unlike revolving credit such as credit cards that allow ongoing balances. However, the benefits of personal loans come with potential risks. Misuse of borrowed money can quickly lead to financial strain. Borrowing for vacations, luxury items, or day-to-day expenses is generally not recommended. While the idea of having extra funds is tempting, it can lead to high interest payments and longer repayment periods without providing lasting value. Responsible borrowing involves differentiating between needs and wants, and making decisions that contribute to long-term financial stability. Choosing the right lender is another critical aspect. Banks, credit unions, online lenders, and peer-to-peer lending platforms all offer personal loans, but their terms can vary widely. Interest rates, fees, repayment flexibility, and customer service are important factors to consider. Comparing multiple lenders ensures that you receive the best possible rate and loan structure for your situation. Online platforms often provide faster approval processes, while traditional banks may offer lower rates for loyal customers. Repayment strategies are equally important. Personal loans require consistent monthly payments, which should be incorporated into your budget. Missing payments can damage your credit score, lead to additional fees, and create financial stress. Many borrowers find it helpful to automate payments to ensure consistency. Tracking the loan balance, monthly payments, and remaining term helps maintain a clear perspective on progress, providing both motivation and accountability. Interest rates and fees vary depending on multiple factors, including credit score, income, and loan amount. Lenders typically consider your financial history, debt-to-income ratio, and existing obligations before approving a loan. Higher credit scores often result in lower interest rates, while poor financial history may lead to higher costs or denial. Understanding these variables can help borrowers take proactive steps to qualify for better rates, such as paying down existing debts, correcting errors on credit reports, and maintaining steady income. Financial planning is a key component of responsible borrowing. Before applying for a personal loan, it is advisable to calculate the total repayment amount, including interest and fees. This helps determine whether the monthly payments are manageable and whether the loan truly serves your financial goals. Creating a budget that incorporates loan payments, savings, and daily expenses ensures that borrowing does not create additional financial pressure. Personal loans can also facilitate major life milestones. Weddings, home purchases, and large family events often require substantial upfront capital. A well-structured loan allows individuals to plan these events without disrupting their long-term financial stability. For instance, a wedding costing $15,000 could be managed with a 3-year personal loan at a reasonable interest rate, allowing the couple to enjoy the event without long-term debt stress. Similarly, planned home renovations can enhance property value and quality of life, making borrowing a strategic financial decision. It is also worth noting that personal loans provide financial education opportunities. Borrowers learn to manage money, plan for repayment, and make informed decisions about credit. Developing these habits not only helps with the current loan, but also prepares individuals for larger financial decisions in the future, such as mortgages or business investments. The discipline required for successful repayment cultivates a strong foundation for long-term financial health. When considering a personal loan, it is crucial to avoid common mistakes. Many people borrow impulsively without assessing whether they can afford repayments or if the loan is truly necessary. This can lead to stress, missed payments, and even legal consequences in extreme cases. Responsible borrowers plan carefully, ensure they understand the terms, and prioritize loans that serve essential needs or add value to their lives. Another aspect to consider is the effect on credit score. Proper use of a personal loan can improve your credit score by demonstrating timely payments and responsible debt management. Conversely, missed payments or default can severely damage credit history, making it difficult to obtain loans or favorable interest rates in the future. Understanding the connection between loan behavior and credit health is vital for long-term financial success. As we move further into understanding personal loans, it becomes important to focus on long-term thinking. Most financial mistakes happen because people only think about the present moment. They see an immediate need or desire and make a quick decision without considering future consequences. A personal loan should never be taken with a short-term mindset only. You should always ask yourself how this decision will affect you 1 year, 2 years, or even 5 years from now. For example, if you take a loan today, it means you are committing a portion of your future income. Every month, a fixed amount will go toward repayment. This reduces your flexibility in handling other expenses. So before taking a loan, you should be confident that your future income will remain stable enough to support these payments. If there is uncertainty in your job or business, it is better to be cautious. Another important concept is financial control. When you take a personal loan, you should feel in control of your finances, not the other way around. If your loan starts to feel like a burden or stress, it is a sign that something is wrong in your planning. A well-managed loan should fit smoothly into your life without causing anxiety. Let's talk about lifestyle adjustment. After taking a loan, it is often necessary to make small changes in your daily spending habits. This does not mean you have to live a difficult life, but you may need to reduce unnecessary expenses. For example, cutting down on frequent dining out, avoiding impulse shopping, or limiting entertainment expenses can help you stay on track. These small sacrifices can make a big difference over time. Another powerful habit is tracking your money. Many people do not know exactly where their money goes each month. This lack of awareness can lead to overspending and financial problems. By tracking your income and expenses, you gain clarity and control. You can identify areas where you are spending too much and adjust accordingly. This habit becomes even more important when you have a loan to repay. It is also helpful to set financial goals. A personal loan should ideally be connected to a goal, such as improving your home, upgrading your skills, or consolidating debt. When you have a clear purpose, it becomes easier to stay disciplined. You are not just making payments, you are working towards something meaningful. Let's consider another example. Imagine a person who takes a loan to start a small side business. He uses the money carefully, invests in the right tools, and works consistently. Over time, the business starts generating income. which helps him repay the loan and even earn profit. In this case, the loan becomes a tool for growth and independence. Now imagine someone who takes a loan without a clear purpose. He spends the money on random things and does not track his expenses. After a few months, the money is gone, but the loan remains. He struggles to make payments and feels stressed. This situation is very common and highlights the importance of planning. Another key idea is patience. Financial growth does not happen overnight. Some people take loans expecting quick results, but reality is different. Whether you are using the loan for education, business, or home improvement, it takes time to see the benefits. Patience and consistency are essential for success. Let's also talk about discipline in a deeper way. Discipline is not just about making payments on time. It is about controlling your decisions, staying focused on your goals, and avoiding unnecessary risks. For example, after taking one loan, you should avoid taking another unless it is absolutely necessary. Multiple loans can quickly become difficult to manage. Another important factor is learning from experience. If you have taken a loan before, think about what went well and what did not. Did you manage your payments easily, or did you struggle? Did the loan help you achieve your goal, or did it create stress? Learning from past experiences helps you make better decisions in the future. Let's discuss the concept of financial confidence. When you understand how loans work and manage them properly, you feel more confident in handling money. This confidence allows you to make better decisions, not only about loans but also about savings, investments, and other financial matters. Knowledge and experience together build this confidence. At the same time, it is important to stay realistic. Do not overestimate your ability to repay. Some people assume that their income will increase or their situation will improve, but this is not always guaranteed. It is better to plan based on your current situation, rather than uncertain future expectations. Another useful tip is to review your loan regularly. Check your remaining balance, interest paid, and progress toward repayment. This keeps you aware and motivated. It also helps you identify if there is an opportunity to pay off the loan faster, such as using extra income or bonuses. Speaking of extra income, this can be a great advantage when managing a loan. If you have a side income or receive additional money, you can use part of it to reduce your loan balance. This can shorten the repayment period and save you money on interest. Even small extra payments can make a difference over time. It is also important to avoid comparison with others. Everyone has a different financial situation. Just because someone else is taking loans or spending money does not mean you should do the same. Your decisions should be based on your own needs, goals, and capacity. Another common mistake is ignoring small details. People often focus only on the big picture and overlook important terms and conditions. Before taking a loan, you should understand all the details clearly. This includes payment schedule, penalties, and any additional charges. Being informed helps you avoid surprises later. Let's also talk about mental peace. Financial stress can affect your overall well-being, including your health and relationships. A poorly managed loan can create constant worry, while a well-managed one can give you peace of mind. Always prioritize your mental comfort when making financial decisions. Another perspective is to think of a personal loan as a responsibility rather than an opportunity. Many people see loans as easy money, but in reality, it is a commitment. You are using future earnings today, which means you must be responsible in how you use it. Building good habits during loan repayment can benefit you for life. Habits like budgeting, saving, tracking expenses, and planning ahead become part of your routine. These habits remain useful even after the loan is fully paid off, helping you maintain financial stability. Finally, remember that every financial decision shapes your future. A personal loan is just one part of your financial journey, but how you handle it can have lasting effects. With the right mindset, planning, and discipline, you can use personal loans as a tool to move forward, not backward. As we go deeper into the concept of personal loans, one of the most important things to understand is self-awareness. Many financial problems do not come from lack of money, but from lack of awareness. When you know your limits, your habits, and your priorities, you are in a much better position to make smart decisions. A personal loan should match your reality, not your imagination. For example, if you are someone who struggles with saving money, then taking a loan without a strong plan can make things worse. On the other hand, if you are disciplined and organized, a loan can be handled smoothly. So before even thinking about interest rates or lenders, take a moment to evaluate yourself honestly. Another important area is planning before borrowing. Most people focus on what they will do after getting the loan, but very few think deeply before taking it. A better approach is to plan everything in advance. Ask yourself simple questions. Why do I need this loan? How will I use the money? How will I repay it? What will I do if something goes wrong? These questions may seem basic, but they can prevent big mistakes. Let's talk about control over spending. Once you receive a loan, it is very easy to lose control and spend more than planned. This happens because the money is already in your account and it feels available. That is why it is important to decide in advance where every part of that money will go. If possible, use it only for the purpose you planned and avoid mixing it with your daily spending. Another useful idea is separating needs from wants. This is one of the biggest challenges in personal finance. A need is something essential, like medical treatment, education, or necessary home repair. A want is something that adds comfort or enjoyment but is not essential. Personal loans should mostly be used for needs or for things that bring long-term value. Using them for temporary desires often leads to regret. Let's explore the idea of financial pressure. When someone takes a loan beyond their capacity, every month becomes stressful. They start worrying about due dates, payments, and penalties. This stress can affect their focus, work performance, and even personal relationships. On the other hand, when a loan is well planned, it feels manageable and does not disturb your peace of mind. This difference is very important. Another angle to consider is income stability. If your income is fixed and reliable, managing a loan becomes easier. But if your income is irregular, such as in freelancing or business, you need to be extra careful. In such cases, it is better to keep a larger financial buffer so that you can handle months with lower income without missing payments. Let's also discuss the idea of small steps. Some people think in extremes, either no loan at all or a very large loan. But sometimes a smaller loan is a better choice. Borrowing less reduces risk and makes repayment easier. You can always take another loan later if needed. But starting small gives you more control and confidence. Another powerful concept is consistency. Success in managing a loan does not come from one big action, but from small actions repeated every month. Paying on time, tracking expenses, avoiding unnecessary spending, these habits build over time and create stability. Even if the progress feels slow, consistency always wins in the long run. It is also important to stay flexible. Life does not always go as planned. Your income may change, your expenses may increase, or unexpected situations may arise. Being flexible means adjusting your budget, cutting unnecessary costs, and finding ways to manage your loan even in difficult times. Flexibility helps you stay in control even when conditions change. Another key idea is responsibility. When you take a loan, you are taking responsibility not just for yourself, but also for your future. Every payment you make is a step toward fulfilling that responsibility. Avoid blaming situations or others. Take ownership of your decisions and stay committed to your plan. Let's talk about habits that support loan repayment. One useful habit is saving a small amount regularly, even while repaying a loan. This may seem difficult, but it creates a safety net. Another habit is reviewing your finances weekly or monthly. This keeps you aware and helps you stay on track. Awareness is one of the strongest tools in financial management. Another important thing is avoiding shortcuts. Some people look for quick ways to handle loans, such as taking another loan to repay the first one. This can sometimes work in specific situations, but often it leads to deeper problems. It is better to solve financial issues step by step rather than looking for quick fixes. Let's consider discipline in spending again, but from a practical angle. Before making any purchase, ask yourself, do I really need this? Can I delay it? Is there a cheaper alternative? These simple questions can prevent unnecessary expenses and help you stay focused on your priorities. Another helpful approach is using extra income wisely. If you receive a bonus, gift, or side income, instead of spending it all, consider using a part of it to reduce your loan. This not only reduces your burden, but also gives you a sense of progress and achievement. Let's also discuss the importance of patience in financial growth. Many people expect quick results, but financial improvement takes time. Whether you are repaying a loan or building savings, progress may be slow in the beginning, but with consistency and discipline, it becomes stronger over time. Another important factor is learning continuously. Financial knowledge is not something you learn once and forget. It is an ongoing process. Reading, observing, and learning from others can improve your understanding and help you make better decisions in the future. Let's think about long-term impact again. A well-managed loan can improve your financial position, build your credit history, and create opportunities. But a poorly managed loan can limit your options and create stress. This is why every decision should be taken carefully. Another perspective is balance. Life is not only about saving or only about spending. It is about balance. A loan should fit into that balance. It should support your life, not control it. Finding this balance is the key to financial peace. Finally, remember that you are in charge of your financial journey. A personal loan is just a tool. It does not define your success or failure. Your decisions, habits, and mindset are what truly matter. With the right approach, you can use loans wisely and move toward a more stable and secure future. As we continue this journey of understanding personal loans, it is important to look at the bigger picture of financial life. A personal loan is not just about borrowing and repaying money. It is about how you manage your overall financial behavior. The way you handle one loan often reflects how you will handle other financial responsibilities in the future. One powerful idea to focus on is financial awareness in daily life. Many people only think about money when they are in need, but strong financial habits are built every day. The way you spend small amounts, the way you save regularly, and the way you plan your expenses all play a role in how successfully you can manage a loan. Small habits may seem unimportant, but over time they create big results. Let's talk about decision making. Every financial decision has a consequence, whether immediate or long-term. When you take a personal loan, you are making a decision that will affect your monthly life for a certain period. So instead of rushing, it is always better to pause and think. Even waiting 1 or 2 days before making a decision can help you see things more clearly. Another important aspect is clarity of purpose. A loan should always have a clear reason behind it. If your purpose is unclear, your spending will also become unclear. This leads to misuse of funds and difficulty in repayment. When your purpose is strong, your actions become more focused, and you are less likely to make mistakes. Let's consider the idea of financial discipline again, but in a deeper way. Discipline is not something that comes naturally to everyone. It is built over time. It starts with simple actions like paying bills on time, avoiding unnecessary purchases, and sticking to a budget. When you build discipline in small things, it becomes easier to handle bigger responsibilities like loan repayment. Another useful concept is prioritization. Not all expenses are equal. Some are essential while others can be delayed or reduced. When you have a loan, prioritizing becomes even more important. Your loan payment should be treated as a top priority, just like rent or basic needs. This mindset helps you stay consistent and avoid missed payments. Let's also talk about distractions. In today's world, it is very easy to get distracted by offers, advertisements, and social pressure. You may see others spending money or enjoying luxuries and feel the urge to do the same. But it is important to stay focused on your own goals. Your financial journey is unique, and comparing yourself to others can lead to poor decisions. Another key idea is control over impulses. Impulsive decisions are one of the biggest reasons people struggle financially. When you see something attractive, your first reaction may be to buy it immediately. But taking a moment to pause and think can save you from unnecessary spending. This habit becomes even more important when you have a loan to repay. Let's discuss planning for unexpected situations. Even with the best planning, life can surprise you. Expenses can suddenly increase or income can temporarily decrease. This is why having a backup plan is important. A small emergency fund, support system, or alternative income source can help you manage your loan during difficult times. Another powerful strategy is gradual improvement. You do not need to become perfect overnight. Start with small improvements in your financial habits. Reduce one unnecessary expense, save a small amount, or organize your budget better. Over time, these small improvements create strong financial stability. Let's talk about mindset. Your mindset plays a huge role in how you handle money. If you see a loan as a burden, you may feel stressed and negative. But if you see it as a responsibility and an opportunity to improve, you will approach it with a better attitude. A positive and practical mindset makes a big difference in your financial journey. Another important factor is consistency and effort. Just like any other goal, financial success requires regular effort. Skipping one payment or ignoring your budget for a month may not seem like a big deal, but repeated mistakes can create problems. Staying consistent, even when it feels boring or slow, is the key to long-term success. Let's also discuss awareness of consequences. Every action has a result. Missing payments can lead to penalties and lower credit scores. Overspending can reduce your ability to repay. On the other hand, timely payments and careful spending can improve your financial health. Being aware of these consequences helps you make better choices. Another helpful idea is setting limits. Decide in advance how much you will spend in different areas of your life. For example, set a limit for entertainment, shopping, or eating out. These limits act as a guide and prevent overspending. When you have a loan, these limits become even more important. Let's think about progress. Sometimes people feel discouraged because they think their progress is too slow. But progress is progress no matter how small. Every payment you make reduces your debt. Every good decision improves your situation. Instead of focusing on how far you have to go, focus on how far you have come. Another concept is accountability. Being accountable means taking responsibility for your actions. You can also share your goals with a trusted friend or family member who can support and encourage you. Having someone to discuss your financial plans with can help you stay motivated and avoid mistakes. Let's talk about learning from others. You can learn a lot by observing how other people manage their finances. Notice what works and what does not. But remember, do not copy blindly. Use what is useful and adapt it to your own situation. Another important idea is avoiding overconfidence. Some people become too confident after handling one loan successfully and start taking bigger risks. It is important to stay balanced. Confidence is good, but overconfidence can lead to mistakes. Let's also consider the importance of reviewing your goals. Over time, your priorities may change. What seemed important earlier may not be as important now. Regularly reviewing your goals helps you stay aligned with your current situation and make better decisions. Another key factor is simplicity. Financial management does not need to be complicated. Simple habits like tracking expenses, paying on time, and saving regularly are often more effective than complex strategies. Keeping things simple makes it easier to stay consistent. Let's discuss the idea of long-term peace. At the end of the day, financial decisions should bring you peace, not stress. A well-managed loan should feel like a step forward, not a burden. If a decision increases your stress too much, it may not be the right choice. Another perspective is growth. Every financial experience, whether good or bad, teaches you something. Instead of feeling discouraged by mistakes, use them as lessons. Growth comes from learning and improving over time. Finally, remember that your financial journey is a process. There will be ups and downs, but what matters is your direction. With awareness, discipline, and patience, you can manage personal loans effectively and build a strong financial future.